Welcome to IVOT Presents Wall Street Week in Review with your host, Emil Westergaard.
There's something happening.
Welcome to IVOT Wall Street Week in Review. Today is Saturday, July 23rd, and we will be doing our weekly review of the stock market action for the week, anything of interest in what happened in the overall markets or in any of the various stocks that we track. And then today we'll be taking a look at Apple and discussing as a group whether we think it's a good position in the hedge fund. It actually already is a 2% position in the hedge fund as of this week. We keep adding names to the fund. We want to ultimately get the fund fully invested on the long side and then on the short side as well. So that's what we're up to in the fund. Before we start with that, let's just quickly share screen and take a look at what happened at IVOT Academy this week in terms of any additions or to the actual community platform. So if we go to the home page here, just cycle through a couple of things that are new. So obviously this is just our discussion of today's show. We do have earnings dates now up, so you can subscribe to those just to get a reminder if you're interested in any of the companies. But our forecaster librarian Ruslan has been posting the earnings dates for the companies that we have tools for. We will be publishing new tools, new forecasters for these companies should be on the day after they report the numbers. So it'll be the new forecaster with the new cash flow baseline valuation for you to take a look and reassess your analysis. Yes, my location is Lima. We did post the recording from last week's show on Meta. I think that was a good show. A lot of interesting topics we discussed. We have posted the tool for Google, Alphabet. We have also posted the hedge fund. So if you want to go and see what's in the hedge fund and ask questions about it, you can go take a look at the hedge fund itself, the IVOT hedge fund. We did add a position in Starbucks, and we added a position in Apple. And we do have the Apple forecaster now up on the platform. Let's see, just some news. Halliburton, just looking at the price of oil and gas going up can help certain companies, obviously, in the oil and gas industry. In this case, Halliburton makes drilling supplies. So again, just seeing that, yes, we're all suffering at the pump, but there are some stocks that make money from this. So you can understand that. Merck is coming up and some other companies. Okay, so we'll go back now. Let's go to the market. Where's that? Hey, hold on, I have it up. Okay, here we go. So let's talk about what happened on the stock market this week. Again, we use the Russell 3000 as our proxy. The Russell was up 2% this week. I don't think there was any big news that I saw driving that. But it does seem that the main fear, again, that's been driving the markets is inflation. Last week, there was some negative inflation data that caused the market to go down. This is 2 weeks ago. And then I think some post-analysis that suggested maybe that was a inflated number, that inflation will be going down in the next couple of months. One of the things driving that, going back to gas pricing and oil pricing, was that there has been a decline in gas and oil pricing, which is definitely an important factor in global inflation. So the market has been in a more positive mood since then. Year to date, the market is now below what we call bear market territory. I mean, in other words, it's no longer below 20%. So it's at 18% down for the year. So that, I guess you could say, is a somewhat positive sign. And I think if we go to the implied volatility, and I think this is pretty interesting. So the implied vol now continues to decline. So the overall, again, for those of you who are new to this platform, implied vol is a measure of the riskiness of the market according to the market. And so in a way, you could call it the level of fear among investors. And the way you would look at this essentially is the actual score of volatility is 20% right now, 20.1%, which is in the 58th percentile rank. So over the last year, this is the 58th percentile of where it's been, from 0 or 1% call being the lowest vol in the last year to 100% being the highest vol. So we're still in slightly fear-oriented territory. The way I look at it is anytime vol is above 50%, there is an orientation towards fear. Anytime it's below 50%, you could call that an orientation towards hope. And in this case, hope, let's call this fear or hope about the future. If we go down to the chart, I think what's even more interesting in regards to that is, yes, we're down to 20% implied vol. And that is a very rapid decrease from where it was, what is that, about a month ago, right? So this is the July 22nd. On June 10th, implied vol for the market was at 32%, which was, I can remember, that was the 100 percentile rank, meaning that was the highest it's been in the last year. So literally in about a month, we've gone from the epitome of fear to almost being in hope in terms of the investor sentiment, if you want to call it that. Let me pause there for a minute. Any thoughts on that, Samval, from your perspective, in terms of what you're seeing in the world and why the market sentiment would have changed so dramatically in 1 month?
The only thing that I've noticed is, like you said, the gas prices. Well, they've come down a bit and they keep going down. But market-wise, I don't think that like much has changed from what I've seen anyway.
So I guess maybe another way to think about this is the drivers of fear, as far as I can say, have been inflation and the war in Ukraine, and kind of the instability that Russia is creating globally in the kind of political power sense. So, you know, the war in Ukraine continues to slog along. I honestly don't feel very up to date on any recent developments in that. And I mean, that may be partially due to the fact that it just hasn't been in the forefront of the media as much. And as you said, you know, you can see whatever this was, you can see a week ago, July 15th, there was the inflation data came out. The vol spiked for a moment, but then clearly it seems on further analysis, people are more positive about what's going to happen to inflation and how many Fed fund rate raises will be required to get inflation under control. It's hard to say beyond, again, speculation at this point, whether inflation really is under control or not. I don't, you know, again, I think the latest set of numbers was not good, but again, if gas prices are going down, does that foretell a reduction in inflation? We'll have to see. You know, one of the things maybe be good to know when the next Fed, you know, when we get the next set of inflation numbers. so we can kind of have that even in the events calendar on the platform, because I think that's interesting. It's interesting for our investments. It's interesting for understanding what's going to happen in the market. And I mean, let's put it this way. Going back to our, what about a couple of weeks ago, when we watched the Grant Interest Rate Observer conversation on interest rates, and his prognosis that interest rates needed to be raised significantly higher in order to slow inflation. I think I'm not convinced, I guess, that the dollar is somehow now under control. But I wear a huge, I take my own opinion with a huge grain of salt. I think in general, whenever we're discussing whenever we're discussing forecasting macroeconomics, I know people who love to kind of say they understand these things, but in general, economists are famous for being right 50% of the time, right? And I'm talking about the best. And I'll just say this as for anyone who's interested in that topic, I do recommend a book called The Alchemy of Finance by George Soros, who is the greatest macroeconomic investor, probably in the last 50 years. And so I think what you get from that book is, more than anything, if I recall, was just a sense of humility, that he had a sense of what was going to happen in the world, that he was able to make money from. But part of his sense was the ability to know that anytime he had a sense, it could be wrong. So he often was very quick to reverse directions on his views, and often made money going exactly the opposite of what his original insight had told him. So I think it just goes to show that part of being an investor is being intellectually nimble, not getting stuck on your view of the world, and your view of a company. A company you like may turn out to be a disaster, and a company you think is a disaster may end up being your best investment. So it takes a lot of mental facility, acuity, self-awareness to be able to keep an open view of everything you're looking at, and recognize that I own everything as of today. I used to have to think of that when I was a hedge fund manager. I might own something for years, but in the end, I only owned it as of today. And one of the benefits of being in stocks is, if you change your mind, you can sell something. If you decide you don't really want to own it, you can get rid of it. And you can get rid of it whether you've made or lost money. Now, again, if you've made money, we talk about at a personal level, you're creating a tax liability. So, if you're just no longer excited about it, then you may not want to sell it. You may just want to put it to the side because you don't want to create the tax liability. But if you really change your view, if you suddenly hate stock, then I think it's always best to just get that off your book. Take your profit, take the tax hit, and move on. All right. I think I mentioned last week. Well, let me pause there for a minute. Any further comments from you all on the market, or thoughts? Gala, any thoughts from you from Peru? No. Any further thoughts? I thought, Samval, you mentioned just any other personal reflections on inflation. Have you noticed it anywhere in the sense of walking around in your day? I know you mentioned the restaurant last week. I thought that was interesting.
Yeah. Oh, you mean like that? Yeah. Yeah. I mean, prices everywhere have gone up. Like everything that I've been going to for years, like that restaurant I mentioned last week. everything has, they added $3, $4, $5, $6 on top of what the usual order was,
Yeah.
which is very annoying. Um, and it's not like they're changing it like gas prices, where it's like, oh well, one day it's this or one week it's this, and it's different. They just keep going up.
Sometimes it's also hard to keep track of this stuff, right? Um, I think that's something that honestly I'd like to do a better job of myself, is just to be a little bit more aware of what I'm paying for things now versus in the past. Um, a couple of examples of that. One is just, I know corporations are changing packaging in order to hide inflation. So they might include a little bit less in the package, so it's the same price, but it's actually just you're getting less. So you don't realize that in fact that you have been, they have raised price on you. They hide it.
As that
The
happens.
other thing, which, I think we shop a lot in farmers markets. And I think when you're buying food like that, you know, we're not, we could be more careful about tracking how much we're paying for a pound of this or a kilogram of that, just to see how that's changing over time. Our farmers raising their prices and we're just not really paying attention. That requires some discipline, and yeah, maybe we can talk a little bit about that. But I think now would be the moment, really, just to say that I would put it to all of us, including those watching the show, to bring that requires some detailed discipline, right? Like, kind of at the end of the day saying, well, what did I spend for these things? Let me write it down somewhere so that next week or next month I can compare what I'm spending for these things and really be on top of it. It's not something that is necessarily made easy for us. Like I said, it's not something that necessarily sellers want us to do. And so, and again, we're going to look at Apple here in a minute. But do you notice, Sam Vell, because we were talking about online gaming earlier, but do you notice any kind of change in your online experience?
No, not at all. Everything's been the same prices forever.
Yeah, it's interesting. The two things that terrify people who run the economy are hyperinflation and deflation. Because deflation causes the economy to shrink. And if pricing is going down, people also then actually tend to put off buying stuff, expecting pricing to continue to go down. There's all kinds of interesting things around deflation that we could, look into and talk about. The internet is actually a deflationary force around money, because we obviously have much more options in terms of where to buy things. And so this is, what you see in Japan, for example, has been a deflationary economy for a long time. And it's been a tough, in certain ways tough in Japan. There's been no economic growth for a long time because of deflation in pricing. It's a big topic and maybe one we can take on at some point. All right. So I was watching the show last week and let's take a pause for a minute because I felt like we just plowed from topic to topic, and I just thought maybe it would be good, and maybe we can also, when we do the recordings of this, put in little breaks or something between the sections so that we just don't, it doesn't become a little bit overwhelming. But we are next going to go to Apple, and maybe actually though, to that point, and also because I talk so much, I'd like to get more. Anything else from your week, Sam, from a financial perspective?
Not that I've noticed.
No.
No.
And
Oh,
have you been? What's that?
Chinese food. I never eat Chinese food, but I decided to. I'm gonna try. I haven't eaten in like 4 years. The last time I remember regular meal was like $5.50 or something like that. I paid $10.
We should get Ashley on about that because her family owns a Chinese restaurant, but her restaurant's actually more expensive than that. But yeah.
Well,
Uh,
things have changed. I didn't like that.
Well, I don't know if Gala, you're willing to talk. I mean, Gala and I, we live together and we've been talking a lot about personal finance. And this is actually an interesting topic. I mean, personal finance, when you're living with someone or when you're in a, you have to align your thinking about money. And I think that this is honestly a big topic in the world, because I think a lot of relationships fall apart based on two people who never align their thinking about money. And that becomes an increasing source of conflict over time. Money in terms of how you spend it, how you save it, how you invest it, what your goals are. And I think it goes back to what I was saying about becoming more disciplined and detailed about things so that you really can, deal with the issues because they come up. And if you deal with them in the way that when they come up around a specific purchase or a specific issue around money, then you deal with it. It may be uncomfortable, but you deal with it. If you don't deal with it, these accumulate, and become grudges, and they become much bigger topics. So I think that's something we're interested in at IVOT, is the kind of the emotional element of money, because money's a very emotional topic. I mean, Sigmund Freud basically said that money is the foundation of human psychology. Or very foundational anyway. So, all right. Well, let's go on to Apple. We all know Apple. Apple is I think the largest computer company in the world, really focused primarily on hardware, but now increasingly also looking to make money off of selling subscriptions and other services. So we'll take a look at that in a minute. The stock this week was up essentially in line with the market, was up 2%, I think we said. And Apple, for the 5 days, the market was up 2% and Apple was up 2%. So pretty much just traveled with the market this week. Year to date, Apple's down 15%, so slightly, again, we talked about this last week, outperformed the market by 3%. So if you're a hedge fund manager and you can have your shorts do worse than the market and your longs do better than the market, even if they're both down, you will be making money, right? If I'm running a balanced hedge fund. So in that sense, it's been despite it being down 15% on a relative basis, it's outperformed the market by 300 basis points. It's been doing pretty well again since the same time, since mid-June. And let's just take a look at the implied vol. So it's currently sitting at a 31.8% implied vol, which is the 69th percentile rank. So it's actually has more fear in it than the overall market, even though the stock has slightly outperformed the market. That's pretty interesting. So implied vol is at 31.8. Again, implied vol for the overall market is 20%. So this one's 31.8. If you look at it on an absolute basis, Samvel, why do you think that the market vol would be lower than Apple's stock specific vol? You're muted.
Well, the market vol has a bunch of stocks averaged in, so.
Exactly, it's diversification, right? I mean, the market vol is thousands of stocks. This is one stock. So in general, one stock is going to be higher vol than a whole diversified set of investments. Good answer, good. And again, we're in a fear-based territory at 69%. I mean, that's solidly in the land of people are afraid about Apple's future. Before we look at the stock, I mean, from your perspective, Gala, I mean, I know you're not an Apple user.
No.
And it's interesting, I think.
Not an iPad?
No,
it's
that's-
an
It's
Oh,
Android, Samsung.
Why aren't you an Apple user, Gala?
That's a good question. Because to be honest, I just find their products, they are so exclusive. I guess their technology is very exclusive and it doesn't allow for open source.
yeah, I know you heard it, but I didn't.
Can you hear me?
No,
Oh, well, you can. So turn on your mic. I'll turn off mine. Go ahead.
she's too far away from the mic, I think.
Go ahead.
Oh wow, sorry.
That's echoing.
What I, yeah,
Turn it off. It's over here. She's here. She's in the same room.
hi. What is your mic?
Yep, go ahead.
Okay. What I was saying is that I just think that when their technology came in and there was already a base here for Microsoft products, and Apple's were very different. Just in even their USB cables, they had different. So it was just complicated to handle that for.
You said closed source, right? It's, I mean,
Yeah,
Apple is a closed source platform.
Yeah, it's closed source, and it wasn't the way it came into Peru. It just came in as an exclusive, as an exclusive item. It was a luxury item.
Well, I was going to say, I was going to think in Peru,
yeah.
Apple's quite expensive
Yeah.
relative to, you know, the Android-based products. So
No.
generally, you know, unless you're wealthy here, you're using Android because there's just more or less expensive options.
Yeah,
Apple is
E-
generally premium priced.
even iPhones.
Yeah.
I mean, iPhones have become more accessible, but still, it's a luxury item here. It's not like widespread like in other countries. Yes, here it's Android. I have all my tech gadgets
Yeah,
are Android.
cool. So, well, Apple, so I guess it was kind of getting to the question of whether and why Apple is, you can stay in the picture, why Apple is fear-based in terms of sitting right now. What would be making people afraid about Apple's future? Any thoughts on that, Sam Bell? Why you think the market is fearful about Apple's future?
Well, I know there's a chip shortage, and chip shortage with inflation, I'm sure that causes some sort of issue for supply, for supplies for Apple.
Well, let's take a look at that then. So let's look at the forecaster, which I have here somewhere. There we go. So from a IVOT baseline valuation perspective, the current cash flow value, well, let's just go. So we have Apple here. I'm not going to walk through the logic of this. You can, follow that elsewhere. But currently, according to our logic, the baseline value right now is $167 based on the fact that they generated $26 billion of cash flow in the last quarter. In other words, this company based on cash flow value is worth $2.7 trillion and is currently trading at $2.5 trillion market cap. So you're actually buying it at a discount. And, from a growth perspective, it had a pretty good year, right? A year ago it was worth 146, and now it's worth 167. So the fact that you're buying it at a discount, and assuming this is what we call the proxy for a 3-year view, meaning in 3 years it's only going to be worth 154, that would imply a significant slowdown and decline in the overall business. I also note that this is on the quarter ended March, which is their weakest quarter of the year, meaning it's post-Christmas. So they sell a lot of stuff in the fiscal first quarter ended December. And so the second quarter has lower cash flow in general. I think the value of the company was about $200 almost based on the fourth quarter cash flow. Maybe that's overstated, but would be an understated value number. So 154 looks pretty interesting to me as an investor. I mean, if what we want to do is buy long-term cash flow streams that are solid and that have a good growth potential, I do think Apple is one of the better companies in the world just to have as a core holding. What else can we say about this? Let's go down and look at the numbers for a little bit, and then we'll dig in a little bit further. So when we look at sales, they basically break their sales down into iPhone, which is their biggest product by far, right? So $50 billion, up from $47 billion a year ago. And so one thing we can say about Apple is, as goes the iPhone, so goes Apple. If iPhone starts to do poorly, then Apple would have a real problem because it's such a big part of their business. But it did fine. It grew 5.5%. I'll say this about Apple. Apple works on product cycles, right? So they launch a new iPhone, they sell a ton of them, and then people kind of that kind of goes down, and then they wait until the next one comes, right? I think people are waiting for 13. Is that the next one that's coming?
Oh, 13's out.
Oh, 13's out. When did that come out?
No clue.
Huh?
I
No
don't know.
clue. Well, we can look it up. Let's just see. When is the next new iPhone coming out? Well, it looks like they're putting out one a year, right? So there'll be one coming in the fourth quarter. So I guess maybe I can kind of say that cycles a little bit. But anyway, they grew Apple phones 5.5%. Mac computers grew 15%, so that's a pretty strong growth rate for their computers. iPad is down, but is not really that material. And then they also have pretty strong growth in their wearables segment. But you can see that overall growth grew 6.6% in the products. This is the products piece. So this is Apple hardware. Then we have services, which is basically their membership, their subscription services. They have 825 million subscribers paying $8 a month, or $19 billion a quarter in service sales. That's up from 16 billion. So that piece grew 17%. And, you know, Gala, let me ask you a question. Just don't mean as quiz, and I'll give your answer. You don't have to come over here, but what do you think is more profitable for them? Where do we get more cash flow from as investors? From the products or from the services?
I think for services.
Yeah, I mean, services are basically cloud-based services. There's very little manufacturing involved. You know, the more people they have on services, that's probably, I mean, you can actually see it down here, right? They spend 27% of their revenues to make that product. So in other words, their gross margin on services is 73%. Their gross margin on product is only 36%. So for every dollar of product sales, they're making 36 cents of gross profit. For every dollar of services sales, they're making 73%. So when we think about the future of the company, increasing the services piece is very important. Now, if we go back up to sales and services for a minute, I find it interesting that yes, sales grew, but their sales per customer was down 6%. So they grew the number of subscribers using Apple services, but they got less money per subscriber. So I think that would be something that we would want to read about. And we're going to take a look at that in a minute. We're going to go through and just see what their comments were on that. Let's just see. So going back to sales, overall grew 8.6%. Cost of goods sold so despite the inflationary pressure, they reduced their spending on cost of goods by 30 basis points. So that's a pretty good performance given all the inflationary pressure in the world. Their spending on services went down a lot. In other words, the more they run through their computer systems, their big, their big cloud system in terms of cash flow, it's all profit. So they have a fixed cost. The way you would say that in financial math is, again, you talk about cost of goods as being fixed and variable. So if you look at the products, they have factories making the products. That's a fixed cost. So yes, the more phones they sell, they do make more money, but the variable cost of those products is also high because every phone needs its, software. I mean, it's casings and it's fancy LED and all that stuff. Same thing with the computers and everything. On the other hand, if you compare that to the services business where all of it's just running, all of the costs are just the fixed cost of the cloud. Every time they sign on some new subscriber, it's basically all profit. And we can eventually model fixed versus variable costs for these lines of business. That would be a level 3 model for Apple, would be to look at cost of goods sold in terms of fixed versus variable for those two product lines. Because we could then say, well, if this is the margin improvement, what will margins be in 3 years? We could do a fixed versus variable analysis and kind of get a reasonable estimate of what that would be. Okay, and then we're not really worried about forecasting, research and development or SG&A. Those are generally more stable. They spent a little bit more on R&D. They spent more on SG&A, but that's discretionary. They decide how much they're going to spend there. That's not something that we're going to try to forecast as much. In this case, though, again, operating profit was basically $30 billion for the quarter, up from 27.5 billion a year ago. So very nice growth in operating profit for a company this size. Anything else remarkable in here? They have 51 billion in cash, 140 billion in investments, and 103 billion in long-term debt. And the share count went down by 500 million shares. That's interesting. That means that they're buying back their shares. Generally, and when a company buys back their shares in a way that impacts the share count, they think their shares are a good bargain. So they're using their profits to buy back their own shares, which if we agree with them as investors, if we think the company's worth a lot more than where it's trading right now, then we want to buy shares and have the company also buy back the shares too, because that means we own more of the company, right? We own more of the profit stream if we have fewer shares outstanding. That's good for the existing shareholders, as long as we like the future. Does that make sense, Sandal?
Yeah.
All right, let's do this. Before we go to the forecast, so the press release, this is their press release. They don't really have commentary in the press release, which is kind of unique. A little bit annoying to tell you the truth, but they give us the sales. That's all what we saw in the forecaster. They tell us sales by region. We'll look at that at level 2. Sales by category is what we just looked at, and then the balance sheet and the cash flow statement. That's all we get. So the other thing, let's just go back to the tool. And let's take a look at at least the beginning of what they say in the transcript. So, good day, welcome, blah, 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 just the legal language. So Apple's proud to report another record quarter. Wearables and accessories had their best. iPhone, Mac, and wearables all had their best ever March quarters. And services set an all-time record for strength of subscription growth. They announced a breakthrough with their most powerful chip for a personal computer. So they feel like their new chips are driving demand in the Mac, which has been strong. We also expanded their iPhone offerings. They're not talking about the new iPhone yet. Continued growth in wearables. Apple services. So this is the one I was curious about because this is so profitable. Apple services. Service revenues rose to 19.8 billion, reflecting a 17% increase from a year ago. This, again, we see that. I just want to see where they say anything in more detail about what's happening with services. We continue to see increased customer engagement with our services. Our transacting accounts, paid accounts, all reached all-time highs. We now have more than 825 million subscribers. We saw that, up 165 million during the last 12 months. Nothing of real detail there. Okay, well, I'm going to stop there. I'm going to read this, and maybe later I'll share in the Academy if I find any comments. If you're interested in Apple, I'm guessing in the Q&A someone has asked about services, so we will look into that some more. But let's go back to the tool now. So let's do our game here. Let's
Emil,
play the Apple game.
before you start that, when I searched up iPhone 14, one of the top articles from multiple sources was they now have multiple suppliers. They diversified their suppliers to
Okay.
the point which I made before. So I thought that was interesting.
Yeah, that's good. That obviously that gives some protection from any problems from any particular supplier. It's a big business being a supplier to Apple. In fact, we can invest in stocks that supply to Apple, right? Would be another interesting thing to look at. So let me ask you each. So iPhone grew 5.5%. Any reason to think that it'll be any slower than that over the next 3 years? Gala, any thoughts on that? What do you think?
I don't think so.
Yeah, I mean, I think that
Yeah.
again, they're raising their pricing, they're adding technology, and people who use iPhone are not going to stop using the iPhone. I just don't see it. So,
Especially if you like phone companies market them to you.
right, the phone companies are also that's a good point. The phone companies are very tied into Apple and wanting to help Apple sell the new phones because that's part of their business as well. And that is something else that, we should look at is the 5G, what is that what it's called? The new
Internet.
Yeah.
internet services.
Yeah, 5G networks.
Yeah, that may impact upgrades in phones as we design phones that are more 5G equipped. So I'm going to say, what was your number? What's that?
They're more expensive. My
Yeah.
friend, they're more expensive.
So what do you want to use as a 3-year growth number? What's your number, Gala? No one knows.
Yeah. My
Well,
number grows.
Yeah. What percent per year?
Okay, let's do it.
Gala gives it 10% growth.
Yeah.
What do you think, Sam Bell?
10%?
Yeah.
No, I don't think it's that aggressive. For a weak quarter, I think we raise it by maybe 100 basis points.
So you want to go to kind of like 6.5, 7?
Yeah.
Numbers.
Yeah. Well, this is just what we think the average growth rate will be per year for the next 3 years.
In the US or
Global. This is
Oh,
global.
okay. Yeah, thank you.
Yeah. I'll split the difference. Let's use 8.
Okay.
And how about Mac? Any thoughts on Mac growth? Mac has rebounded. I think Mac was kind of slow for a while for them, but has lately been much more positive. So
I don't think it's going to be like 15 or 16.
should we use 10 there?
Yeah, I don't think.
I would be happy with that.
Okay, I think 10 is good. I mean, I think again, they're still innovating those products pretty well, as far as I can tell. I'm not going to do anything with iPad. And then wearables, let's just say that grows at 10.
Yeah.
So that would give us $189 in 3 years. Oh, and then let's do services. So they have 825 million subscribers around the world. That's not going to continue to grow at 25%. That would not be impossible. But let's say, we say 10% growth there. And then I think they should be able to grow the revenues per subscriber into the future. I mean, that's got to be one of their main goals, right? Is then to start to get more money, people paying for other kinds of services from them. I would put in 10% there. I think if they don't do that, then they're not running their business right.
It's going down, though.
I know it went down. Well, I think part of the reason it went down, I'm guessing, and I will do some more work on this since I am the Apple analyst. But when you add that many subscribers, year over year, then you've got a lot of new users who are just starting to pay.
Mhm.
So that might be part of the reason it went down.
Oh,
So in this case, we're already up to 232. It seems so far, to your point about suppliers, Sam Bell, that they've been able to, I'm not going to give them cost leverage given the inflationary pressures, but, and again, we can read up some more on this, but let's just assume that they continue to manage costs flat on products, but services margin should continue to go up, right? Because of the high fixed cost. I mean, that went up 250 basis points in 1 year. I think that they'll probably spend money on services to try to increase the offerings to get people to spend more. So that might be a counteraction to, the margins going up, but let's just say that goes down to 26% over the next 3 years. I'm going to leave that as my target. And that would give us a price target of 235 for the company. Level 1. I will just show us level 2, and I hope you all will play this yourself and do your own level 2 analysis. But if we go to level 2, they break out their business by region. So let's just quickly walk through this and then make the decision on the investment. That's the end of the show today. America's revenues grew 19% in the quarter. So they had a very strong quarter in the Americas. And operating margin went up 700 basis points, huge increase in profitability. Europe only increased 5%, and operating margin actually went down a little bit in Europe. So completely different results in Europe. Greater China saw very little growth. They did see some increase in operating margin. Japan has been pretty flat. Rest of Asia was actually down. But these are much smaller businesses for them. These are the 3 most important. So we're not going to do any forecasting here, but we have the tool available. So go make your own forecast. Let's go now to the hedge fund. So if we put in Apple here with a $235 price target, and the vol is, what was the vol again? The vol was 31.8. So it has it scores out at a 1.7. I'm going to fix the, let's see. So let's fix that here. So we got a target of 235 and a vol of 31.8. So just, again, from a game playing perspective, just to make sure everyone understands the game. So again, the score for Apple is the return over the volatility. So the higher the return, the lower the volatility, the better. And you can see the scores for each of our positions. So we have 11.5 as a total score, and Apple is 14% of that number. So, and we right now own a 2% position, 2.3. So I think we need to do some more research before we can continue to buy it. So I'm going to come back with some answers to the questions today in terms of why services should be growing. I want to do a little bit more digging since I'm the analyst here. I'm responsible for this one. What else did I want to say about this? Oh, I think the other thing I just wanted to mention with Apple, going back to the tool, is Oh, here on level 1. The next report date. Oh, no, that's not right. Let's put it in there. Fix that. Apple next earnings. It's actually in the July 28th. So that's this coming week, right?
Yeah.
All right, so next week, I think we're planning to do Uber as our stock. But I will also, give an update on Apple. We'll also have an update on Tesla. Hopefully Armando can give us an update on Tesla because Tesla reported numbers last week. And just see what did the stock do. For the 5 days, the stock was up 11%. So clearly the market liked their earnings report. So we need to do an update on Tesla and see what's going on with the company. That's it for today. Thanks everyone for joining us for Wall Street Week in Review. And we'll see you next week when we look at Uber and Tesla. All right. Ciao.